You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to this Investing Matters podcast. My name is Peter Higgins. You can find me on Twitter at Compass3. And today I am blessed to be with Chris Mayo, CFA chartered holder, former investment banker, head of primary markets for the Americas at London Stock Exchange Group. Welcome, Chris.
Thank you very much for having me, Peter.
Right. Welcome, Chris. I'm going to go through a few bits and pieces here so people know of the expertise that you're bringing to this particular pod today, Chris. So for those that don't know Chris provides guidance to companies and their shareholders on financing strategy, helps companies from the Americas across all sectors access high-quality institutional capital in London public markets. He has close to 30 years of corporate finance experience in New York and London for Barclays, Salomon Smith Barney, Citigroup and Schroders, and has completed numerous M&A and equity transactions. Before taking up primary markets responsibility for the Americas, Chris spent 2 years at LSE Specialist in London on the technology and life sciences sector with a focus on LSE's relationship with venture capital investors. So there you go, Chris. Yeah. Well-travelled, you've been at it forever. So that's why we've got you on the pod. And I like the fact you've got a nice little nudge from your former colleague there as well, Neil Shard, saying, look, get him on the show. So thank you for accepting the challenge.
Well, I mean, the role that Neil does, the tech sector specialist, I actually created in 2014. So he owes his job to me. And I actually introduced him to Marcus Stuttard, who's the head of AIM and UK primary markets at LSEG. And that's how Neil ended up in that role. But we're very happy to have him there because he's been an incredible asset to the organisation and has really deepened our relationships with tech companies and venture capital. So I think we're going to see the fruits of Neil's labour over the next year or so and see a lot more tech floats, but we can talk about that more on the podcast.
Certainly. No, thank you very much. Obviously, we're giving you a warm welcome, so thank you for coming on the show. But I want to start our journey way back to Chris, the young man. I'd like to start a conversation as a young sporty lad growing up in Salford. You know, everyone knows about Lowry and the Chimneys and the Matchstick Men and so on and so forth. Yeah. But you've got a connection with certain individuals in a globally famous club. Do you want to just tell us that story about you as a young sporty Chris Mayo?
Yeah, so I mean, I don't want to pretend that I grew up without shoes and eating sawdust because that's actually not true. I didn't grow up in a council estate. So what I would say is that, my dad started his own business. We were, scratching along. But then by the time I went to high school, he'd done well out of that job. And we were doing well by local standards, is what I would say. So it's not like I ever had to work for any money or anything like that. So I had a comfortable upbringing. But like I say, I was born and bred in Salford, on the west side of Manchester. And I was a good football player growing up. I would say great, so we can talk about that a bit later. And I played on the same Sunday league team, which is called Deans, with a left winger called Ryan Wilson, who later became known as Ryan Giggs, who's probably the all-time appearance leader for Manchester United. I think he actually might be the all-time Premier League appearance leader in terms of the amount of matches that he played. And so, yeah, we played on the same team for 3 years. I was captain of Walton High School, which will mean something to people who are from that particular area. And he was a captain of Borside High School, which were about a mile and a half apart. And so we had a rivalry from that perspective. And obviously our paths differed from there. I knew when I was that young, my dad had been a youth team player at Manchester United and also reserve team player for a couple of lower division football league teams. I think he was interested to see if I could kind of go further than he did. But even as a young lad, I was actually pretty pragmatic, and I could see that I was more likely to succeed by doing well at school. I was very good at school, and that would be the way to, have a more successful career and, be able to make money and actually have interesting experiences. And so that's the kind of route that I took. And I doubt, put it this way, I doubt that Ryan Giggs is sitting around his kitchen table saying, I'm sure he listens to this podcast religiously.
You can only hope.
And saying, I knew Chris Mayo back in the day. But I think, I'd say I'm very pleased with a lot of the things that he did. For being a massive Manchester United fan, I'm very pleased with a lot of things that he did for Manchester United.
Absolutely. So was there a tinge of disappointment initially from your dad that you didn't pursue the football, regardless of you possibly not making the highest grade?
Yeah, I think there was. But I think if you asked him today, I always had this kind of strange pragmatism, even as a child. And I think this really goes to decision making. I was always weighing probabilities and thinking, what is the most likely route to success? It's not like and if you heard Michael Lewis talk about Sam Bankman-Fried, literally every decision was an expected value calculation. I don't think I'm that, kind of analytical, but there is an instinct there that I've always had saying, which is the best way to go forward. And I think, seeing the bigger picture, even as a kid, I was very good at that. I think that's something that's got out through my career, kind of be a systems thinker rather than be very siloed and focused on one particular thing. And I think actually that's pretty important in football as well, because most of the goals that get scored are from people ball watching, which are the focus too squarely on one particular thing that's happening, and behind them things are happening, and that's where goals get scored, when you watch the ball and not the man. And I think that I've always been able to see the wider picture and be able to, and this goes to finance as well. It's not just about, get people focused on UK small cap equity. You need to be able to understand the private markets to understand what's happening in the public markets and vice versa. So you need to have a wider perspective on these things. And, my whole career has been different places, different products. And, I think that wider perspective has been very useful to me.
Absolutely spot on. Now, you were clearly very, very good academically, and you knew that, being a pragmatist. You decided to pursue that. What happened next? Where did you go to study? What did you do for a qualification? And what were your thoughts then? Given what you were planning to study, what were your goals then? Were you thinking about, when I get this degree, I'm going to do X?
You're right. Well, I say, I'm going to have to kind of always contradict myself. I was a bit kind of lost. What happened was, I got all A's at A-level, all A's at GCSE, all A's at A-level. And then I wanted to go to Oxford and Cambridge because that's what you do. I actually got rejected. Even though I made the grades for Cambridge, I actually got rejected. I wanted to do German and Czech, Slovak. Had an interview and they didn't like me for whatever reason. But I was always really good at languages, so I went to do German. And I was very good at chemistry, but again, the pragmatist kicked in and said, I don't want to do a chemistry degree. There's no money in that. So I did a business degree at Aston University, which actually was great. It's because it was business in German. It wasn't separate subjects. They were teaching business in German. And I thought it was much more applied than other things I could have done. And I lived in Germany for a while, and that worked out really well. And then when I finished, I got first, and so that was really great, outcome for me. But then I had no idea what to do, so I got rejected from loads of jobs on kind of what was called the milk round back then. I was still call it that. When all the graduate, all the companies come through and recruit. I got no jobs, and at the time I had a girlfriend in Quebec, in Canada, so I went to live in Montreal for a while. And then I thought about what I should do. I thought, I've got first, I should become an investment banker, because the people with the best degrees become investment bankers, and that's got the best earning potential. Again, the pragmatist was there. And so as I talked about before when we were chatting about this earlier, while I'm looking for a job, I go to the job centre in Walden in Salford, and I say to the woman, I'm looking for jobs. And she's like, okay, what kind of industry would you like to get into, Mr. Mayo? I said, I would like to be an investment banker. And she kind of looks at me in this kind of bewildered way, like, huh? And she goes, are there many of those in Salford? And I was like, no, not really. And, you just kind of think about that back then, you realize how unlikely it was that I was going to get into that profession, given where, going to a state, big comprehensive, and it just doesn't really happen. But as it happened, I applied to a number of banks on the next year on the kind of recruiting cycle, and I got quite a number of offers. And I ended up going to Barclays de Zoete, which was called BZW, and that was really interesting. But actually, 6 months in, the Barclays sold their investment banking business to Credit Suisse, and I decided to leave because I'd rather work for, I'd been offered a job by Schroders as well at the time, and I turned it down to go to Barclays, to BZW. And then Schroders came to me and offered me the job again, and I ended up going there, and that was great because Schroders was a really strong name in investment banking back then, and I just did lots of deals, quite frankly, and it was a really great entrance into the investment banking world.
Fantastic. Do you want to just expand a little bit more on those deals, your experiences at Schroders, and all the rest of it? Because there's lots of nuances to that particular job. First, you get in as almost like an undergrad, but then you're thrown into the pot, aren't you? And having to just hit the ground running.
Yeah, I mean, the good news about Schroders, and I think this is different if you were starting certainly an American investment bank, was that Schroders had a lot of incumbent clients. So I wasn't doing that much pitching. I was actually executing deals, and they gave me a lot of responsibility as a junior, even as a junior analyst. So, I remember doing a sell side for Arjo Wiggins. They were selling Appleton, which was their coated and thermal paper business, which is based out of Wisconsin in the United States. And I'd be sitting there with the CFO working on the sell side, information memorandum. I'm a 23-year-old sat next to the CFO, and there's no MD with me. And we're looking at the model, looking at the materials, and then obviously you send that out and you get bids. And I just had a really good experience at Schroders, I have to say. And then the other one, the one that's kind of the high profile one, which is actually a lot smaller in terms of deal value. I worked on the minority sale of Liverpool to Granada TV. They sold 10% of the company. And I remember going to Chester, which is kind of neutral territory, to meet with like Rick Parry, who was the Liverpool. I think he became the Premier League CEO, was the Liverpool CEO at the time. It was Noel White as well, who was a senior FA guy, was on the Liverpool board. And there were three of us from Schroders there. There was Ian Robertson, Alan Jacobs, and me. Both me and Ian are United fans, and Alan was a Chelsea fan, and we didn't really kind of let that slip, but it was kind of funny that we were advising Liverpool on this particular transaction, and then it came out in the kind of, I think it was the Times financial diary, kind of little tidbits that they do, and it's like, I don't know if Liverpool realised that everyone who's working on that deal team hates Liverpool Football Club, but it was a great transaction to work on, and I think, as we've seen, I wrote a lot on LinkedIn about the Jim Ratcliffe deal recently for Man United, and then minority stake again, and how minority stakes can be tricky. So we'll see what happens with that particular deal. Usually the issue is, what is your route to control, and that was the case with Granada TV as well. They eventually sold that stake about 10 years later. The whole business of football has become a really interesting part of the kind of cycle.
And the bit you missed out there for me was the fact that for some reason you were given the nickname of Scouse as well. So I'm not sure whether you threw that into the conversation.
Yes, I completely forgot about that. I mean, I think this goes to the point I was making about it being unlikely for me to become an investment banker. I was a guy who wasn't from Oxbridge, who was from Manchester, and you can even today I have a pretty strong accent. I'd say it's moderated over the years, but then it was very strong. And so there were people at Schroders who were just kind of bewildered by, who is this person? And I used to wear really bright green shirts, which, and I think I was just trying to show off and stand out. And they were just they didn't understand my accent, so they nicknamed me Scouse, which is obviously, for people who are not from the UK, that means someone from Liverpool, which is not what you call someone from Manchester. It's like calling someone from New York, calling them
absolutely
from Boston. It was just a very strange thing, and so my nickname was Scouse, which fortunately has not stuck. I'm glad to say.
Good.
Although,
good
mate, now I after this, I'll
no, we're not bringing it back. We're not bringing it back.
Yeah.
No, we're not. Okay, so before we get on to the London Stock Exchange Group, I need to talk about so our audience need to get a really big picture of what you've done, right?
Yeah.
So experiences as an investment banker, dynamics of the prestigious role of being a staffer, all the dynamics and nuances of that, going through the dot-com boom and bust, and the global financial crisis as well. I think is really important to discuss as well, to show the experiences and the navigation of it and the thinking and the learning that you've had to go through. And obviously all of that leads to you becoming the guy that everybody wants to work with at London Stock Exchange Group. But we need just colour that for me first, please, Chris, before we get to LSE.
Right. So what happened was I was always interested in going to the US. I just thought it would be, from an investment banking perspective, it's the most sophisticated market. And so I got the opportunity, and I kind of engineered this opportunity through a colleague. And so Schroders sent me in October 99, which is nearly 25 years ago. And I think it was kind of mind blowing. Sent me in October 99 to, I was kind of a mid-level analyst, and I was training some other analysts in New York. We were supposed to for 6 months, but what happened was Schroders sold their investment banking business to Citigroup in early 2000. I decided to stay. So this, it became Schroders, Salomon Smith Barney in London, and then I was just part of Salomon Smith Barney in the US. And I became an associate there, and I worked on lots of interesting deals. So part of that was that I was working on a B2C internet IPO in, I think, 2000. Ridiculous stuff. I mean, that was a kind of a seminal moment, and it's important to draw the line to the future. There were a lot of companies that went public then, which didn't really have any, kind of meaningful revenue. And then, I think Pets.com is probably the poster child that went public and then went bankrupt within 6 to 9 months of going public in the US. And that really made a big difference. And also at the same time, you had the WorldCom and Enron scandals. And so that led to the Sarbanes-Oxley regulation, which really increased the liability for senior management in terms of, and they had to attest a lot more to what, and it also increased the cost of things like, just insurance and also accounting, your audit, because of the level of liability and the amount of work you need to do. But the consequence of this is you used to have a lot, and this is important for my job today, what you used to have in the US were lots of smaller IPOs for companies with $10, $20 million of annual revenue. That essentially has died out because of what happened at that moment, because it became prohibitively expensive for a small company, say, so now we're talking about sub $2 billion of market cap to go public. And it really changed the market. The US has migrated to become a large cap IPO market, or certainly a mid cap IPO market, since that regulation came in. So that has become a big moment, and that actually affects what I do today. So that's important to mention that particular dynamic. Also, I was there for 9/11, which was obviously, I was there on the day, which was a pretty obviously harrowing experience. But what I think was interesting about that, obviously separately, was just how things just continued as normal. The next day, it was business as usual, if you can imagine that. And that's the way that America is. Things just still got done the next day. I had to go to a disaster recovery site in Rutherford, which is where Giant Stadium is, where the World Cup final will be in 2026. So I got out there from Manhattan, and I was basically clipping together commitment committee memos for debt deals that were going to happen on that particular day. And obviously this is before Zoom, this is before Uber. So this was actually quite, so I was printing stuff and clipping it out. And I went back to Manhattan on the 12th of September and I drove around in a taxi delivering these memos to all these managing directors. And, I get there at 11 o'clock at night, and I have I give a guy a commitment committee memo. He's kind of like, what time do you call this? I'm just like, you do realize what's happening. The world is falling, but all he cared about was his commitment committee memo. And the fact that, he had that in his hands, the call was, early the next morning to approve the debt deal and Solomon's participation in it. But that's the way that the US works. And so I'd say, that working there was very difficult, but it was a baptism of fire. But I learned a hell of a lot as a result of that. And then you mentioned the staffer role. Staffer basically is somewhat, in addition to my day job, which was to pitch deals and to execute deals, I also had to allocate all of the work for the industrial group at Salomon, which was a really large group. I probably had 20 analysts. I had to allocate work to them. So the MDs and VPs would come to me and say, I've got this pitch in a week. Can I get an analyst to work on it? And I'd look at the workload of the various analysts and also things they'd worked on to give them some variety. And I would portion that work. But what I would say is people would routinely lie to me about when the deadlines were for things, when the pitch was. So I actually had to go around and do my own research and find out, when is that pitch really? And it'd be like, there is no pitch. We've actually set a date. Okay, no, you can't have an analyst. And I would get into all these spats with people, with MDs about, you're not being honest to me about when this, we're resource constrained. And then I would say then I moved back to the UK in 2007 and was an ECM, emerging markets ECM, did Russia and Poland, Ukraine, did a lot of Russian IPOs. And then in the financial crisis, Citi essentially went bankrupt, was saved by the US government, same for a number of other banks actually in the US, essentially went bankrupt. And I did a lot of Polish IPOs. I think Polish IPOs and equity deals. What was interesting about that was that the Polish equity funds, and this is an interesting thing about pension fund reform in the UK, the Polish pension funds were mandated the amount of funds they had to put in domestic equities. They completely supported the domestic market. So Polish market was actually relatively strong during that period. And we're able to do a lot of deals, and it's because of the mandated allocation the Polish domestic pension funds had to domestic equities, which I think is an interesting discussion for what's happening with the UK right now.
Indeed. And I think, we're going to talk about it a bit later on regarding the reforms that are needed. We need to do something because of the levels of institutional backing that we've got currently in the market, which is absolutely minuscule, meager. So we'll talk about that in a little while. I'm going to open up the discussion regarding the London Stock Exchange, PLC group, etc. And we'll start with a two-part question here, Chris. Please, can you tell us what led you to join the London Stock Exchange group in 2014 and your initial role when you joined, because it's vastly changed over the past 10 years. So what was the initial role that you joined and how did it come about?
So I'd invested in a tech startup and been working with them, and probably this is 2011 to probably start 2012 to 2014. And that worked out okay. We sold the business, and then I was looking to do something else. There was an old colleague of mine from Citigroup in ECM called Tom Attenborough, who's currently, and actually I think even back then that was his title, head of international business development primary markets. And we were just having a chat, and he said, there's going to be, someone's going on maternity leave. We need someone to fill in. Can you come on as kind of a consultant, And I was like, yeah, sure, I can do that. So this is like probably, we're having this conversation late 2013, I want to say. And so March 2014 comes around and we're having a negotiation, and then I just come as a consultant on a day rate. So I actually wasn't even an employee. I was doing bits and bobs on the side as well. And the role was basically, can you cover Oxford, Cambridge, London, because that person is going to on maternity leave was covering those areas. And I said, sure, I'll do that. And then I came in, and then I was like, what we need to do is we need to do something more sector focused. And Oxford and Cambridge really made sense from a tech, especially life sciences perspective. We need to guard against losing companies to NASDAQ in those sectors in particular. That's where it makes sense for us to have a sector focus. So I created that role just out of thin air, and then I started to do that. And then we actually, started to sector focused events to, raise awareness about London's capabilities and capital access in those particular sectors. And we actually did pretty well. And we got quite a few floats even in life sciences, which has been a question mark for London for a while. We actually got quite a few floats in those areas just by having that focus. And now, obviously, since then, I'll go on to the US. I moved to the US in mid-2016. Just talking about those two roles, the tech and life sciences roles, since then we've had James Clark, who now works for Molten Ventures, do that tech role. Tim Davis now does our healthcare focused outreach. He's still at LSE. Obviously, Neil Sharp does the tech. So I think that initiative has been successful for us because we needed to focus on those sectors in particular because they naturally look to the US, and we needed to have our own answers. And I think that we do actually in lots of cases. And I could talk about, the advantages of London versus the US and how people don't really understand what's going on in the US. Probably that's a subsequent question. And then with regards to the US, my wife got a job in Chicago in 2016. So I said, guys, I'm leaving, bye. And they said to me, actually, we'd like someone to take on the US role. You've got a lot of experience in the US. You've got a good network. Can you please go ahead and do that? So I did.
Brilliant. Love that. I wanted to give you the second part of the question now, and just give us a tiny little overview, please, if you will, regarding the vital role the London Stock Exchange plays in the initial public offerings and listings of companies, followed by your role now and the geographical reach of what it encompasses as the head of primary markets for Americas. Yeah.
So I think the role that we do, I think it's different across geographies, but certainly say in the UK, what we're trying to do is we're trying to help. And by the way, say if you think about all the things that are happening at LSE and LSEG right now, we are increasingly reaching back into the private markets. We have an investment in a business called Flow, which helps companies basically present information and do private raises. Then we've got the Pisces platform, which is the private markets platform, is likely to launch this year. I mean, the government has talked about that. That's with later stage private secondary sales, which I think is an important thing to be involved in. I think that's the good news about that is it'll be on our platform. So anyone who's plugged into the LSE right now for connectivity to do public trading, all of those intermediaries and also the fund managers will also be able to be plugged in directly to the Pisces private market platform and participate. It's a huge differentiator. And so we've got the public markets. Now, from a public markets perspective, what we do is we just try and talk to companies about their funding roadmap. And that's why I mentioned the private markets stuff before, and say, think about all of these different steps. And then when it comes to IPOs, we help companies with understanding the process, the cost, the requirements. We help get them involved with the right kind of advisors, lawyers, accountants, and investment banks. So my job in the US is obviously I'm trying to raise awareness about what we're doing because it's obviously not as obvious to people in the US about what London's for. And I'll talk about where we fit in the US in a second. But really all of it is like demystifying this process, obviously explaining how the US is different from the UK in terms of the IPO process. I've got some things to say about IPO, follow up on that, and connecting to all the advisors. And then when they've done that, obviously hopefully they can go off and execute a deal. So that's what we do from a kind of, helping to lubricate the system, making sure that companies are, understand what the benefits are, incentivizing employees, acquisition currency, much quicker access to capital as a public company. All those advantages, we help them understand and we help them understand the process. Now, from a US perspective, what is my job today? My job is to help companies from the Americas do either IPOs or secondary listings in London. In the US, most of what I do is IPOs for smaller private companies and kind of $50 to $2 billion valuation range. Why would a US company look at London? Well, I talked about this before, about Sarbanes-Oxley. The UK is a much more supportive market for smaller microcap companies in the US. A lot less cost, and actually, something people don't realize is the UK has a higher quality investor base, much more active, long-only investors for smaller US companies than the US market has itself. So if you look at the smaller end of the US market, the active long-only managers in the small microcap space, that has been a shrinking audience for a long time. The UK has a really high quality audience compared to the US for companies in that kind of size range I talked about. So I'm not pitching the IPO of Uber or Airbnb or who it may be. What I would say is my UK counterparts are definitely pitching a $10, $20 billion valuation IPO for a tech company. It's not US. But for me, it's about which niches I can compete in. And on the smaller end, I really can compete. We've had some really good floats. We've had 2 this year, and they're up 100% each from the US to the UK. Again, people always look at me almost mystified when I say you can do an IPO in the UK for a US company, much smaller, and it can be cost effective and actually really give you the platform to grow that company. And I would also say access to follow-on capital for smaller microcaps is much better in the UK than it is in the US. Yeah, people do not realize this. All I can say is you should really connect to me on LinkedIn because you will see a lot of information that surprises you. Now, in Canada, I do a lot of secondary listings. So we take a lot of companies from the listing in Toronto, especially in mining and energy, and say the UK is a much deeper market than Canada. You are too small for the US. You can materially broaden your investor base by adding the UK listing, and the overhead of adding that extra listing is actually really modest. And so for the most part, whatever you report in Canada, you can just reissue in the UK. We don't need to reinvent the wheel and reformat what we're doing. So we've had a lot of Canadian companies that have done that in those 2 sectors. I think we're broadening it out beyond mining and energy right now and having quite a lot of success in that area. So, that is, and what I would say is that we've had companies as small as 10 million in Canada and up to 20 billion in market cap. So it's a slightly different story than the US. But I think, again, it's about being really focused on the niches that you can compete. And we've had a lot of success. So I started this role in July 2016. We've had about 100 listings from the Americas, mostly US, and quite a lot from Canada. That's a run rate of, I don't know, 15 or so a year. I'm just doing it off the top of my head. Certainly, in the teens per year. Prior to me coming out, we were probably doing less than 5 a year. It's just really just telling people about what London's advantages are. And I think that London has a much more robust capital market than people realize. We are top 5 in the world this year for equity capital raising. Until yesterday, we actually even had the largest ECM deal of the year globally. It happened in London. So I think that there is a lot of negativity around London that isn't warranted that we can perhaps go into more detail.
Brilliant. No, thank you for sharing that and giving the insights as to what's really going on rather than the narrative we hear in the media. Can I just go back to Tad? You mentioned 2 deals you've already done more recently and how successful they've been. The names of the companies, what was the structure of them coming across, etc.
Yeah. So the 2 deals we've had this year are Microsalt, which is a food ingredients business from Florida. Basically, the stories around lower sodium. For that, lower sodium ingredients for things like what the Americans would call potato chips and what we would call crisps. The other one is Helix Exploration, which is a Montana-based helium company. And they're both, I think, 90 or to 100% on IPO, which is obviously heartening to see. We have a good pipeline for the rest of the year. I'm hoping that between us taping this and it going out, that we may have at least one other US to UK IPO, but it's not public, so I can't actually say the name of the company. But fingers crossed on that one. We'll see what happens. in the past, we've had a number of really successful deals. So I think the one that really sticks out to me is Boku, which was a San Francisco founded mobile payments company, which was backed by VC, venture capital royalty in the US. Andreessen Horowitz, Benchmark, Kozler, NEA, Index, really well-known VCs. The whole point about that company doing an IPO in London was that just under a $200 million valuation. That's probably $25 million of annual revenue. That is not a viable company to do an IPO in the US, where it is in the UK. And so they did that IPO. They did a $60 million deal. I think 60% of it was secondary, so existing shareholders selling down, so they're getting cash return upon the IPO. That's something that's easier to do in the UK than the US, but all the VCs and PEU watching out there. Hopefully there's loads of them. Subsequent to that, the VCs sold down in accelerated placings overnight, a 24-hour situation, and were able to monetize their holdings in a way that they would if this company was listed on NASDAQ or NYSE. But you just wouldn't do a NASDAQ or NYSE IPO for a $200 million market cap company. That company's also bought a number of other companies since it's been listed and has done primary capital raises, offered stock as consideration in those deals, and really showed how the public markets can work for a micro-cap company, and that's probably tripled in value since it did the IPO. I think that is a really strong indicator of how the UK can help US companies in a way the US markets can't, certainly the smaller end. Other ones, diversified energy, which is from Alabama, assets in Appalachian, a single asset outside of the US. They went public with an $80 million valuation and then just went on an acquisition spree, did $2 billion of acquisitions, raised $1 billion in London as an AIM-listed stock. Incredible story about consolidation funded by the public markets for a US company. We've got a lot of Maxlight, a company from Maryland in healthcare, grew from $50 million on AIM, and then 2 years ago did a NASDAQ listing when it got to $1.3 billion just on AIM, and then done multiple follow-ons. So we can be a stepping stone to the US markets for these US companies too. We can help them when they're smaller, get really high quality institutional capital. And then when they're big enough to list in the US as a US company, which I think is rational, then we've helped them get there. And I think it's a great story.
Absolutely. I love you sharing all that. It's fantastic. And I think it's important to reframe some of the negative narrative that we've got. But we're up against quite a large wall of media, positive and negative. So from your perspective, 17 years of the past 25 in the US, can you just give us a little bit of the nuance of why it would appear that every American investor is aware of, looking at what's going on in the markets versus the British investor, which is a lower number of individuals are looking at the market. It seems to be the bread and butter for every American to be looking at the markets. Obviously you want to see that level of interest in the UK, but how do we go about changing the psychology of the British investor to be, almost a little bit more American, having an interest, keen?
Yeah, I made this comment to some colleagues last week. I think you will frequently hear people in the pub here or the bar talking about stocks. You will, like in the way that we would talk about football team. And so it is part of the kind of people are thinking about investing on a regular basis. A lot of people are investing in single stocks as well. There is just a different equity culture in the US relative to the UK. Now, the weird thing for me is there's a slight strange change that's happening here, which I think is now parallel to the UK. What happens in the UK is you will get people will take risks. So the UK is a very developed gambling market. So if you watch the TV, I remember watching the TV, coming back to the UK, watching the TV, and all the adverts seem to be for gambling websites and things like that. And in the US, it was all for pharmaceuticals. So it was all for drugs, which is kind of a really weird thing.
So drugs.
So the weird thing is, I would say you are now seeing a lot of adverts. There's been a massive deregulation of the gambling market. We're seeing lots of adverts for gambling. I think that's going to be interesting in how that skims money away from the retail element of the public markets. I think people prefer to bet on sport than they do to, perhaps buy stocks. And that's become a really big thing here. I think that's a really interesting dynamic. What I would also say is, from a UK perspective, we need to do more to promote what the stock market is for and how it creates jobs, it creates wealth for you as an individual, and how it's not that scary. And even if that's just investing in mutual fund or a unit trust, that's okay. And I think the British ISA, when that launches later this year, will be a very useful vehicle for us to talk more about the UK market and how the stock market is good for society as a whole, as well as just as an individual from an investing perspective. I think we need to do more in terms of educating people what the stock market, how it works, the fact that you can't lose money. I think it's important to understand. But over time, you typically do make a return that will be way in excess of what your bank account will pay you. Certainly, the way banks have been paying over the last few years. And that, as long as you don't need immediate liquidity, this is something that, although, public stock market, you can sell tomorrow, but you may have lost money. That this is something that can be really beneficial to you in terms of creating wealth. I think that, I said to you when we were discussing this over email, I've never owned a house. I think a lot of people have all of their think about diversification and how you think about investing. A lot of people have a lot of their wealth in their house, and they should actually be thinking about where else to put money to diversify from an investment perspective. I hope that the British ISA is a good opportunity to change the conversation about what the benefits are of the public markets for the average individual.
Brilliant. Love that. I want to go back, if I may, though, to the aspect of the government and regulators, Chris. They're trying to race through quite a lot of capital market reforms to boost London's attractiveness as a trading venue. What reforms would be at the top of your list, Chris? You've seen it, you've done it, you've seen what's going on in America, you've seen what's going on here. What would be your personal, not Lally's, but Chris Mayo's shopping list?
Yeah, I'm going to say I'm not speaking on behalf of the...
Yeah, absolutely. Make that clear.
So I think I have to give kudos to the government, actually, over the last couple of years. They have done a lot, and the FCA as well. They've done a lot to reform London's listing rules for it to be a lot more company-friendly, issuer-friendly. There's been so many changes: reduction, free flow requirements, introduction of allowing dual class voting stock on the main market. Now the changes that are going to happen with, not requiring a shareholder vote around related party transactions, not having to have shareholder vote on class 1 transactions, which are major corporate transactions. I think this just makes it so much more friendly for, for the average company to list in London. So I need to, praise what the government and the FCA have done. I think the UK has been the most progressive market in the world about that over the last couple of years. So it has a really issuer-friendly kind of, environment, I think, now for listing. Now, in addition to that, what else can we do? I think the British ISA is a great way of channeling more money into, but I think it's not just the ISA by itself. The fact that will get people thinking about investing is they're likely to put additional funds into the stock market as a result of this. I think the other thing is, stamp duty is one, which is an obvious question about either reducing it, again, personal opinion, reducing it or eliminating it. It does not exist at the moment for AIM stocks, which is great. But I think for main market stocks, it's obvious that if you've got an investor and you've got something that's trading in New York and you've got something trading in London, and you've got stamp duty on one and that's on the other, you're going to trade out of the venue without stamp duty. So it's just rational behavior. I think obviously the conversation about consolidating pension funds. We have a massive fragmentation of the pension fund industry. The UK has a huge pension fund industry that's very fragmented. Consolidating those at increasing the allocate. I mean, what the government has asked people to do is to disclose what they own in terms of UK assets. I think consolidating them and say increasing their allocation to UK equities. That goes back to the Polish thing I was talking about earlier, would be transformational in terms of the amount of money going to the market, because we've done all these reforms on, let's call it supply side, which is the supply of companies, the supply of issuers, listing reform. We're going to change the prospectus rule. We're going to have a single segment. What we need to do is on demand side, which is increase of capital into the market. British ISA helps. Increasing pension fund allocations to UK equities to where they put, they used to be 40% of their assets, that's something like 3%. And they are investing in equities, by the way, lots of global equities.
Via ETFs and private equity,
So I think that would really change the game in terms of the UK, by the way, still has by far the biggest kind of allocation to equities in any European market. We dwarf all in the European markets, but it's important to maintain that advantage. To be able to make sure that there is a strong domestic base of investors for the deals that we're trying to do. Now, what I'll also say is it's typically 40% of the UK market is owned by Americans, so it's not like we're dependent on domestic capital. We actually attract loads of international capital. But I think these are things that could really help cement London's position as the preeminent European market, and we're also the most international market in the world as well right now.
Yeah, absolutely. I've got part of this here from the London Stock Exchange PLC chief executive, Julia Hoggett, who spent her entire career in capital markets, stated recently that London's initial public offering pipeline is building up in anticipation of regulatory changes. So it seems to me that the Financial Conduct Authority is due to issue some final rules in the coming weeks, combined with premium and standard listing segments to ease some red tape. So that could be a huge positive as well, Chris. Would you be in agreement with that?
Yeah, I do. I think Julie's done a fantastic job, actually. And obviously, I would say this because ultimately I work for her. So, and by the way, she's from Manchester as well and supports United.
Is she really? I didn't know that.
Yeah,
okay.
Yeah, she is. No, I think that she's done an incredible job in terms of that, in terms of increasing the visibility about what we're doing, and also making it very clear about where the pain points are, or what are the things that we can change to really improve the situation. And I think there is a bit of a frustration on our side, is that, and we haven't talked about this yet, but I think that the media has not really grasped yet the things that have been done, which are very positive, but also the point that the US, and maybe we should talk about this more, the US is not the panacea that people think it is. And when you actually dig into the data, UK listings in the US are not that common. US, and when they are, the performance tends to be pretty poor. And also just really talking about the advantages that the UK market already has. And you think that we need to completely transform the market, and it's a basket case. It's not true. And by the way, I was just posting some on LinkedIn about the FTSE 100 at an all-time high. People tend to, okay, it's not performing the way the S&P 500 has, but we don't have NVIDIA in our index. So, I think just part of the story here is to understand what just the benefits we already have, and the fact that the US, it's a lot more challenged a market than people realize.
Absolutely, and also the actual makeup of the FTSE 100 is completely different. Like, as you just touched on there, we've got, was it 1% of the FTSE in tech? If that, They've got 35%. Balancing there, 38 times more tech in their markets. Chris, so I'm conscious of the time, but I'm going to have to ask you about your investing strategies, philosophies, and whether or not you have some diversification in your portfolio. Because as an individual professional working in the markets, you're restricted as to what you can invest. So how do you go about it?
So, because of the various roles I have, I've been in possession of material non-public information. Just generally in the past, I didn't invest in individual stocks. I could, but the compliance kind of administration and bureaucracy security was always a bit of a pain. So I do own LSEG stock, which I've got, through kind of, stock compensation here. And it's actually been a great investment. And again, people will not realize, we talk very narrowly about the LSE. The LSEG as a company is a global financial markets infrastructure company. It is a data company. It's a tech company. It's probably the world's oldest fintech.
It's a tech company. Yeah.
Yeah, it is. And it's done fantastically well. And, obviously we bought, we bought FTSE, we bought Russell, we bought Refinitiv, which is a transformation.
Refinitiv, yeah.
And the stock price performance over the last 5 years of LSEG versus the other major exchange groups, we're way ahead of them. And we're similar, I think we're about the same size as ICE, which owns NYC in terms of market cap, which I think is bewildering to most Americans when I tell them that. I might say we've got 2,000 people in New York, and they're like, how is this possible? I said, well, we own Refinitiv, we own Russell. Russell 2000 is our product. And
absolutely. Oh, okay. And many people don't think or know that. Yeah.
No, they don't. They just don't get it. But I would say from a investing point of view, I've always looked at kind of thematic things, sector-based ETFs. So last year I had the foresight to invest in a semiconductor. But I just thought with AI, I just thought semis is going to be a big thing. I invested in the main semiconductor ETF. That's done really well. Obviously, NVIDIA's, but ARM has also done well. So that's really driven it forward. I think biotech is somewhere to invest, but I think biotech's interesting because I actually think that's one of the areas where an actively managed fund makes more sense than an ETF. And the reason why I say this is that if you look at the US market, there are literally hundreds of all-fund biotechs which are trading below cash. It's really a have and have-nots market where if you've been backed in private rounds before your IPO by specialist investors, you way outperform biotechs which haven't been. And there are lots of the ones that haven't been. And so what you really want is a fund that's managed by an active manager, not just some passive fund, because the performance, there's a huge dispersion in performance in that particular sector. So I've been investing in biotech for a long time, and it really stems from that role I did. I got into the sector. It's not like I understand medicine, but I followed it, and I thought there are such massive opportunities, and it's a secular growth opportunity. All this stuff about longevity. Some of the best performing companies over the last 12 months have been those in the weight loss area, like Ozempic, Jaro, that kind of thing. Absolutely. So Novo Nordisk, Eli Lilly, that kind of thing. It's been a huge area, but there's so many other areas of biotech which are huge opportunities. So I'd say I like to look for sectors which I think will have secular, not cyclical growth opportunities to invest in and get in, hopefully before everyone else has realized that. But I would say I'm not some, and I say I'm all the same kind of biases. I carry too much cash. I've got massive loss aversion, so I get fret. It shouldn't be that I get scared over losses, but I do. You should take a long-term view and realize that you're going to have most markets have massive drawdowns. Even in good years, they have massive drawdowns, and people forget that
at some point.
Yeah, and you just need to stay the course and have the courage of your convictions, and over any kind of medium to long term, you're likely to be fine. And by the way, I invest a lot in the UK. Mm-hmm. I've got a lot of, again, I think smaller market cap, and the UK has a really strong smaller market cap community. They have a lot of great active managers. And so there are a lot of UK active small cap managers that have beaten even the S&P 500 if you look over the last 12 months in terms of their performance. So a lot of people won't realize that. They'll just look at no one invested in headlines. No one invested in AIM ETF. AIM doesn't have a lot of passive money tracking it, and then there really isn't a lot of passive money in small and micro caps in the UK versus the US, where it really dominates, and that's why there's no active managers to invest in these companies. Buying an active small cap fund in the UK you've got a good manager, can really get you a good return.
Brilliant. No, thank you for sharing that, and the discipline of remaining invested long term as well. Because I'm conscious of the times, I'm going to just cram in 3 quick questions here for you. It would appear from what I'm reading and what's in the press as well, the UK's braced for 2 big ticket listings in the form of Shein, which is seeking $53 billion, £53 billion, 66 billion plus listing, and Raspberry Pi coming with a value of about 500 million, $626 billion. That should be helping a bit of sentiment, do you think, going forward as well? And what's going to possibly happen next year? And, you know, the market's at high. Would you agree with that?
I actually do. I think there has been a huge change in the mood over the last couple of weeks for the UK. Now, you talked about Raspberry Pi. I mean, I can talk about that because they're expecting intention to float. Announcement came out this morning, which will date this podcast. So we're talking in mid-May. This has come out probably in June. So we will, by the time this comes out, we'll see what probably will have a much better idea of what's happening with Raspberry Pi. But my view on that is that's a homegrown company. The size that it is perfect for the London market. Perfect. So I hope that goes well. Shein, I've just seen the press reports with regards to that. But what I would say is, as I said earlier, London is the most international market globally in terms of the proportion of international companies listed. So we are a natural home for a company which has that kind of global footprint. And so I think it'd be great to see, obviously, an IPO of that size come to London. But I think the conversations start to change anyway. I think there's a lot more positivity about London than there's been for years, quite frankly, and that's going to translate into IPOs. I'm hoping to have a lot more of my own Americas listings this year, and the signs are much better for that than they were 6 months ago, I'd like to say. And so, we have significant advantages. And what I also say, again, let's mention this point before, for jumbo IPOs, which are raising billions of dollars, London has its own very strong domestic investor base. But as I said, on a typical London IPO, and this is the case when I was doing IPOs as a banker, we get 40% of our demand from US institutions. They don't need a US listing to invest in companies. So I want to make that point really clear to a company that's looking at invest to do an IPO in London. You can access all of the institutions around the world that you want via a London listing. You do not need a US listing. They will come in anyway. So if you can achieve that via a London listing, this is why I never understood the valuation kind of differential argument, because US institutions, if there was a huge discount, they just come in and buy. And by the way, they're looking at the M&A bid in London, and they're just coming in and doing that anyway. So that's just closing. Any valuation differentiation will be explained by differences in growth, differences in margin, ultimately differences in future free cash flow expectations. That's what explains valuation differential.
Brilliant. You've answered the second question I was going to ask. So I'm going to get to the final question before we get cut off. Brilliantly explained there, Chris. So thank you for reiterating those points. Chris, you spent close to 30 years in corporate finance, investment banking, helping companies to raise capital to spur innovation and job creation, as well as generate wealth for the incumbent and new investors. Of all of your achievements thus far, what are you most proud of, Chris?
I'd tell you, I have met and worked with some of the, I'm sorry, this is going to give a wishy-washy kind of touchy-feely answers, so to speak. I've met some amazing people and worked with just really stellar, interesting people. It's the relationships. Right? I'm proud that I've worked and lived, not just in the US. I've lived in lots of different countries, lots of exposure to different cultures. I've just met incredible people, and they've really helped me to learn, and I hope that I've helped them. So it's really about having the achievement is really meeting lots of great people, having fantastic relationships, Peter, and that has really enriched my life. And also, I've got great colleagues at LSEG as well, both in the US, Wendy and Rhiannon, who work with me in New York, but also, people like Julia, Tom, Marcus, Charlie Walker, Neil Shah, the rest of the primary markets team in London. They are just enormously supportive of what I do. I'm just really proud of those relationships and the fact that we whatever we need it, we help each other out.
Brilliant. Thank you ever so much for that, Chris. You've been absolutely phenomenal on this particular Investing Matters podcast. Ladies and gentlemen, please give a big Man United roar for Chris Mayo, CFA charter holder, former investment banker, head of primary markets, Americas for London Stock Exchange Group. Chris, thank you ever so much. And I might see you at the games one day.
Well, I really hope so, Peter. Thank you very much for the conversation. I've really enjoyed it. I hope that United don't get battered by City in the FA Cup final. Again, by the time this comes out, we will know the answer to that. So let's hope we will do us proud for a change. It's been a tough season. But, things are looking up. As I said about the London market, things are looking up.
Absolutely. They are looking up. All right. Thank you ever so much, sir. Take care. God bless you.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.